Bianca Barlow from InvestorStream. Let's delve deeper into the escalating European gas crisis. Earlier this year, InvestorStream covered the combination of events that led to Europe's gas crisis during 2021 and the factors that were leading to further price increases at the outset of 2022. The fast-changing geopolitical environment has led to continued upward pressure on gas prices, compounded by developments that in recent days has seen prices surge again. On the 14th of June, Russia's state-owned gas company, Gazprom, announced it was cutting gas flows via the Nord Stream pipeline to 40% of capacity. This had an immediate impact on prices that were already sitting at record levels. Europe is heavily reliant on Russia for gas supply, ensuring any reductions in supply are immediately reflected in price jumps. This dependency continues to demonstrate the vulnerability of Europe to Russian supply and adds further urgency to the need to increase domestic production. Compounding this situation is the problem of Europe's gas storage facilities operating at around 55% capacity, a significant variance from the 90% European Union-wide targets set for later in the year. This has led to a number of countries, including Austria, Denmark and Germany, activating the first step of an emergency gas supply plan, confirming that the outlook for many of Europe's leading economies is that gas supply shortages will continue over the long term. As reported earlier in the year, these tight market conditions will continue to present challenges for gas consumers. However, they are beneficial for companies that are operating in the oil and gas sector, and particularly those companies that are able to service the European domestic market. ADX Energy Executive Chairman Ian Tchacos told InvestorStream the current conditions in Europe, particularly in Austria where the company is based, are providing opportunities for those in the space.
This is a problem that started actually even before the invasion of Ukraine. We've been involved in the European gas markets, and in 2021 we saw a big increase in prices, probably the highest prices in 10 to 15 years. And that was on coming out of COVID, much stronger demand growth than expected, while you had a drop in domestic production because there was inefficient exploration going on. Also, the commencement of supply drop from Russia, as well as lower LNG deliveries. And all that resulted in low storage levels because typically in Europe, they store gas over the summer months when prices are low and then have more gas for their availability in winter. Unfortunately, the gas price wasn't low, and as a result, there wasn't much gas stored. But so before even, the invasion of Ukraine, we were averaging gas prices that would equate to about $160 a barrel. When you look forward now, the prices are even stronger. The forward curve is around $190 to $200 a barrel.
ADX Energy is strategically positioned with a number of projects that can meet Europe's large unmet demand for energy. The company is also developing new energy reserves, which can significantly increase production in the coming months.
I guess in the short term, we've been increasing where we can our gas production. So we're producing about 290 barrels of oil equivalent per day over the last year or two. Now that's becoming about 25% of our production. Obviously, oil is still in demand as well because Europe was also importing quite a lot of oil from Russia, and we've recently had a discovery, so we'll be increasing production. In fact, we're going to have first production from our first discovery probably in the next couple of months. So that'll probably increase our production rates by about 30%. But what we were able to do there is within 6 months of the decision to go drill a well, we were able to get out and drill a well. And probably within 6 months of having success, we'll be in a position to actually produce. So we're fortunate to be right in the heart of Europe in Austria. We're basically the only explorer in a very prolific oil and gas basin that really hasn't had a lot of attention from bigger companies over the last few years.
There is high-value, sustainable oil and gas production at Zistersdorf, new production and reserves development at Arnshof, high-impact gas exploration such as the giant Welschau prospect, a green hydrogen project in the Vienna Basin, as well as the Upper Austria geothermal project. Importantly, ADX is committed to the production of safe, long-life and low-emissions oil and gas, ensuring ESG principles are also met.
Obviously, Europe has got a very strong transition agenda, and ADX is very, very lucky to be well positioned, not just with its existing hydrocarbon opportunities, but also some what we think will be important renewable projects. So to start with, where we produce oil in the Vienna Basin, 70 kilometres out of Vienna, we've been progressing a green hydrogen generation and storage project. We currently produce gas into the pipeline system. So what we're looking to do now is start to generate hydrogen that we can actually inject into the existing gas pipeline system. So reduce, if you like, the amount of hydrocarbons that are being used, but also look at potentially scaling up in the future for utilising green hydrogen for power generation, for mobility, but also testing our reservoirs, which can store very large amounts of energy, much more than you can, about 2,500 times the amount that you could store in the largest battery. It's very, very important because Europe is trying to create a hydrogen economy and creating infrastructure around that. So hydrogen will be a really important part of the mix.
It is clear that the gas crisis is not a short-term issue and that Europe must prioritise enhancing domestic resources. Austria is one country that is already taking action, and companies such as ADX are ideally positioned to capitalise on the market conditions.